Vaibhav Sanghavi is now joining us. By the way, the market's inching up, 60 points, 61. So 18,305 is where we're at. Vaibhav, of course, is Chief Executive Officer at Avendus Capital Alternate Strategies. Vaibhav, good to have you with us here. Thank you very much for your time. Do you have a kind of tactical, strong conviction view on market direction right now, Vaibhav, near term?
Sure. So I think, Prashant, let's wait for the Fed minutes today, and we'll get more in terms of what is their view, on the interest rates. Having said that, last Fed meeting has clearly said that the pace of rate hikes going forward is not likely to be as aggressive as what they have already done. So in that respect, Street is anticipating some sense of pivot happening probably in one or two policies going forward. So in that sense, we do think that probably from a shorter end, we may see market continue to inch up higher. And this is especially from a global market perspective, which can have some rub-off effect in India as well. But at the same time, we are looking at a lot of developments in China as well. So a lot to play between global markets, emerging markets, and in emerging markets, China, India, and so on and so forth. So too many moving parts at this point in time, but the momentum is clearly in favor of market continuing to rally, provided we hold on 17,800, 18,000 levels on Nifty.
Okay, all right. Hi, Vaibhav. For the time being, it appears Santa may come to town, right, in December. Going by the positioning, volumes as well are drying up. 17,800 on the downside is a crucial level. How are you positioning yourself, Vaibhav? Currently, you'll run a long short fund. I always try to get that out of you. But which side are you all swinging? I mean, how have you all changed that?
No, I think clearly post-Fed meet, we have kind of slightly increased our our net positions, but that doesn't mean that we have gone to our previous averages, but we have definitely turned a little more constructive. Having said that, we do think that this kind of round of anticipation of decrease in inflation, Fed pivoting, would also accompany with the downgrades of earnings globally as well. So we may be in a period where markets can get a little choppy, but at the same time, the preference on the sectors would be those kind of sectors which will give you relative safety, especially on the earnings front. So that is something which we are looking for.
In that case, I presume you would be looking at domestic-focused sectors, the kinds of banking, consumer, etc. What does one do with IT? I mean, it has corrected a fair bit, global-facing. Valuations-wise supportive, but I mean there is no runway for growth as we see from here in terms of visibility. Is it a shorting opportunity?
See, I think incrementally two trends. Mangalam here is basically one that the type of expenditure, type of spending which is kind of happening from an IT perspective is kind of shifting from a discretionary to probably cost-led replacement. This is something which we are getting on ground from the companies. So when this happen is basically then there is pressure on your pricing and the revenue momentum kind of starts decreasing. Also, we need to understand that when global growth is kind of cracking down, of course you may have some tailwinds in the kind of currencies which we are having, but from a revenue standpoint is where you start to see some amount of pressure apart from the margins. So at this point in time, while valuations are a little higher than their averages, we are still not very constructive, on this one.
By the way, the market's at the day's high. It's kind of, I think, across the day's high, new high for the day, 18,310 right now, and almost there actually. So, the move is coming. 66 now, 70. And there's still 30 minutes to go for close, so things can get better.
May I take credit for the spice that has come by on the market so far?
I mean, Mangalam, you have to sing still, right?
No, I don't have to sing. I'll just take credit for the spice.
I mean, Mangalam will sing. We'll come to him in a bit. Vaibhav, what else? I mean, where are you seeing kind of maybe trading opportunities, more tactical kind of opportunities? Because this is that kind of a market, although one wonders whether, unless you are in these momentum sectors, right, PSU banks or railways or defense, whether one is making money, even trading-wise. Any views? Yeah.
No, absolutely, Prashant. I think it's kind of getting a little bit tough, purely because the churn on the sector movement is kind of pretty fast. At the same time, if you look at the medium-term perspective, and that is the way I think everybody should be looking for, especially in the trading community, is try to see that if you are positive on the sectors, on every decline or probably any correction is something that you can probably want to enter for a quick trade, to kind of revert to your mean. So from a medium-term perspective, as kind of it was highlighted, we continue to be bullish on banking, financials, industrials, consumers, and renewables. So those are the kind of opportunities which we are looking for.
Okay, give us some more color, Vaibhav, consumer-related stocks. If you could, just highlight a couple of aspects out there, because it's a very wide range that's present for our audience.
So I think, we need to understand in the light that what I said is basically that those sectors or those companies which gives you relative better earning visibility are the ones who will continue to expand or probably retain their high PEs. So in this case, probably staples at some point in time start, which are the defensive ones, have relatively higher stability in terms of the earnings, given that the domestic, spending is pretty robust. We do think that this is something which will continue to perform going forward. In terms of discretionary, it would be pretty selective, but that is a pocket also. Within specific segments, we can find some amount of opportunities there as well.
Well, Prashant asked me to sing, etc., but I think the ones who would actually be dancing are the ones who would have invested in PSU banks at the start of this year. Vaibhav, you like banking as well. What's your preference there, private or PSU?
The momentum in the PSU banks is pretty strong, but again, I will continue to believe or probably want to invest in something which is especially on the private side. Now, the way we are looking is basically for the next 2 quarters, we will continue to see robust results, at least on the private and PSU space both. However, if you see that the growth is kind of slowing down, and you may see some amount of pressures probably coming into SMEs, probably half a year down the line is where you may see that PSUs to start getting under pressure at some point in time. But till then, I think we are in good space from a banking perspective, both private and public.
The Bhujia maker, Bikaji, look at the sharp pop actually. It's up 10%. It's a 30 rupee move on Bikaji. Recent debut, of course. And the move started at about 215 or so, and it's up about 20-25 rupees in the last 40 minutes or so.
Spicing it up. That's,
absolutely
I think it's Manglam. only Chakna.
For me, the thing is, Bikaji is, I hail from Bikaner, right? So we take our Bhujia very seriously.
Yeah.
But the love that you have for the namkeen, the Bikaji, I mean, I think I should take you to Bikaner one of these days.
I recently found out, maybe, I don't know if you guys, maybe Mangalam would be aware, that Haldiram and Bikaji,
they're the same family.
Same family, same brothers.
Yes.
Came as a surprise to me, frankly. But of course, I mean, Haldiram is also on track. We reported recently for an IPO, etc. So this is a space which is, I think, of course, I mean, Haldiram is much bigger, far larger entity, the biggest ethnic snacks company in India. But Bikaji, of course.
There's this beautiful book called The Bhujia Barons. It talks about the Agarwal family. It has a family tree of who started the Bhujia, and there was this person called Mr. Haldiram Agarwal, and there was his grandchildren who made the Haldiram's brand, which was Shiv Kishan Agarwal, etc. And then came from there, branched out Bikanerwala, Bikaji, etc., all of that. So all of Bhujia in India can be traced to that Agarwal family, and the annual combined total revenue of those families in just selling Bhujia is actually higher than what you would see in a lot of these QSR guys as well. I mean, more Bhujia than burgers.
Absolutely. And it's actually true. Why would you compare the Bhujia makers and the ethnic snacks companies? We were comparing it to Pratap Snacks, packaged foods, right?
Yeah.
But actually, it's competition for the QSR. I mean, it's an alternate food, right? Because they're not just selling you Bhujia, although we are talking about Bhujia, but they're selling you all kinds of stuff.
People talk about share of voice, share of mind and all that. I just say share of stomach.
All right, so that's a lot of Bhujia talk for you. We'll come back. There's some news on the fisc, and this is good news. We learned from government officials that government is unlikely to deviate from the fiscal glide path in the budget. I mean, the glide path basically calls for, a slide glide in terms of the fiscal deficit as a percentage of GDP. There were concerns around this, especially because international fertilizer prices were through the roof. The government had to provision for another round of fertilizer subsidy after what they'd already done in the FY23 budget earlier in the year. Sapna is here with details. Sapna, over to you.
Well, what we are clearly given to understand at this point in time is that the government is intending to stick to its fiscal consolidation glide path in the coming budget. This would mean basically a steady reduction in the fiscal deficit aim by 60 to 70 basis points every year. Over the next 3 years. Now, their aim is to bring it down below 4.5% by FY26. So, 60 to 70 basis points reduction every year, starting from the next financial year, would basically, bring them somewhere over there. Now, this year's aim is 6.4%. If they are able to meet or rather maintain this aim, then a 60 basis points reduction next year would mean somewhere around a 5.8 to 5.9% deficit aim, even with the marginal slippage this year. So, more or less, they are very clear on the fiscal consolidation glide path, and at least as of now, there's a clear intent to stick to that, and maybe the coming budget could enumerate or flesh out at least some of these important numbers that we're talking about.
All right, Sapna, thanks a lot for that. Vaibhav, since we were talking so much about Bhujia, etc., I just wanted to know whether, you're keen on this one, not the snack, the stock. I mean, 350, closer to 345 rupees on the counter. I mean, it was offered at over 58, 60 times 1 year forward earnings, and now it's only increased from those levels. At what point does it become too spicy in terms of valuations?
So unfortunately, I think, Mangalam, I would not be able to because we have conflicted on this. But in overall space of snacks, India as a company or India as a country will continue to absorb or probably keep on using those kind of snacks very aggressively. So there is an adequate market, good amount of growth opportunities. With the right management and distribution network, we can see many companies doing well in this whole segment.
Okay, all right, Vaibhav, always good hearing your thoughts. Thanks so much for stopping by, speaking to us, and also being a little patient with that Bhujia talk. Look forward to chatting up with you and maybe meeting up with you in the coming days.
He's going to grab a handful of Bhujia right after this conversation because we whetted his appetite.
Absolutely.
Okay, Vaibhav, thanks so much for that.
Thanks.
Well, we'll slip into a short
You
break.
should tease Mangalam's song, which comes up next.
I don't know whether there is a song or not.
So we'll slip into a short break. We come back, maybe Mangalam 6 for us. We'll also get in Nimesh. He'll do the real serious talking. He'll tell us what's going on in terms of dealing room chatter. Don't go anywhere.